Watcher Joseph Shaposhnik joining us now. Joe, what do you make of this sudden turnaround in tech? I mean, we, and as smart guys like you, no doubt remind clients these have had enormous run-ups, even with the sell-off in the last couple of days. What do you tell them now?
Well, it's interesting. You know, in 2016, these stocks underperformed. The NASDAQ underperformed. The FANG stocks underperformed. And they're having a decent year this year. They're up 22 to 25% across the board. And the market's up 10%. So I don't view that as being sort of excessively ebullient. And what I'd also say is these companies are growing at 2 to 3 times the rate of the S&P 500 average set of companies, and they're trading at a very modest premium to the rest of the market. So technology, I think, will continue to do well. This is a very natural rotation that we're seeing, and it may continue, and we may get down to a 10% correction point. But these companies are going to continue to do well and continue to lead the market over the next couple of years.
You know, when I look at the two firms that downgraded Apple's stock, including Pacific Coast last week and Who's Securities now, their basic thinking was perfection's already priced in. I'm oversimplifying here, but that, yeah, a lot of good things are in store for Apple, but it's been priced in already. What do you think of that?
Well, it's tough to make that argument because Apple currently trades at 15 times earnings. The market trades at roughly 18 times earnings, and Apple is on the crest of releasing a great new product, which is likely to spur growth over the next couple of years. So arguing that Apple is overvalued, given that it trades at a multiple that's cheaper than the market when it has a great new product coming out, that doesn't strike me as being a compelling argument.
What about technology in general? When you think of the alphabets of the Facebook, even by extension Netflix, Amazon, Apple, they've been leading this. Yep. If there's a breakdown among them, do they all go down together and then rise together, or do we start picking and choosing here?
It's a good question. You know, you've got a set of companies, and I put Facebook and Google in one category. These companies have phenomenal business models, and they're generating tremendous free cash flow. And you have another set of companies that are incredibly richly valued, that are still in the early stages of maturing and generating real economic value for shareholders. And there may be a decoupling over the next couple of years. I would say in my fund at TCW New America, we don't own any of the FANG stocks, but
Really?
We are overweight technology.
What does that mean then? If you don't own any of them, I mean, you just have technology in the aggregate, or what?
No, you know, our strategy is focused on investing in high free cash flow yielding businesses, and we believe that free cash flow is the only element that physically moves stock prices. The challenge with the FANGs is that the FANGs don't have very much free cash flow, and so they're very susceptible to, you know, people's mood swings as what has happened over the last few days. So we're focused on companies that generate cash, like Marvell, which is on the edge of all of the benefits of the cloud. We're focused on TransUnion, which is a credit card bureau that collects 25 cents on every credit card pull that takes place in the United States. So we're focused on those companies that are generating tremendous free cash flow, that are stable, and they're going to grow in all environments.
By the way, do you pay attention to any of the noise in Washington, whether the president and his tax cut stuff is delayed, or health care is delayed, or this FBI thing with the Russians, that heats up? Does that enter into your thinking at all?
Not a lot. I would say that, you know, we're bullish on the stimulus, the prospects for stimulus that are likely to occur over the next few years. We think part of that is built into equity prices, but we're very much focused on looking at individual companies and making sure that those investment theses stand on their own. So we spend all day long turning over rocks, meeting with thousands of companies to find the best ideas that are going to perform in all market environments, we hope.
All right, Joseph, very interesting. Enjoyed having you on. Joseph Shaposhnik, the TCW New America Portfolio Manager, not giving up on tech, just not some of the names that you know. Interesting read. Thanks.